Hi everyone, Ben Dolan with Dolan Capital Advisors. Thanks for joining today. We're going to be talking about Trump accounts. What are they? How do they work? And look at some examples. We've been getting a lot of questions from our clients about Trump accounts, and there's a bunch of confusion about these accounts because they're so new, which makes sense. This information I think is going to be very, very helpful. So Trump accounts were created in the spirit of traditional retirement accounts, but they are for children under the age of 18 years old. So anyone who has a child who is under 18 can open a Trump account. They're not just for children that are born in years 2025 through 2028. However, there is a special provision in that the federal government will deposit $1,000 into a Trump account for children born from 2025 through 2028. So really, when you think about Trump accounts, I want you to think more about these are accounts that are for children under 18 years of age. There's three types of contributions. There's direct contributions, which can be made by individuals, so parents, friends, grandparents, and they're made in cash and after-tax dollars. There's employer contributions, so contributions from the employer directly to Trump accounts or to parents that are custodians of Trump accounts for their children, and then qualified general contributions, which are made by federal, state, and local governments. The combined total amount that can be deposited into a Trump account in any one year is $5,000. However, employer contributions are capped at $2,500. So if you have an employer and they want to contribute, they can only do $2,500. However, if both parents work, each employer can do $2,500 for a total of $5,000. The $1,000 deposit pilot program does not count towards the $5,000 limit in any one year. So if you have a child who's born from 2025 to 2028, in that 1 year, they can get $6,000. Upon turning 18, the Trump account reverts to a traditional IRA type of account and the rules regarding traditional IRAs. So the biggest rule to remember there is at 18 years old, if you have an IRA, you have to have earned income per IRS guidelines in order to make contributions to the account. One warning about using Trump accounts is that parents need to consider their own retirement needs and the educational needs of their children prior to contributing to a Trump account, because Trump accounts, again, are meant for retirement for their children. You can open these accounts at trumpaccounts.gov, and contributions can be made after July 4th of this year. There's two custodians for these accounts, which is something that's a little bit strange, but this is how it's going to work, at least to start. Robinhood and Bank of New York Mellon are going to be the custodians. The investment options for these accounts are going to be low-cost index funds and ETFs. Okay, let's look at two examples. The first example assumes that the government contributes $1,000 in the year of birth for your child, and then you save $5,000 per year that grows at 6% per year from age 0 to age 17. At age 60, that account would have $2.2 million in it. And that's just the incredible eighth wonder of the world, compounding, doing what it does, and growing. So in the second example, let's assume, like in the first example, that the government contributes $1,000 in the year of birth, and then you contribute $5,000 every year from age 0 to age 17. But in this case, the growth is 7% per year. And there's a plan to convert the account to a Roth at age 24. So in this case, the account grows and grows and grows from 0 to age 24. And then at age 24, the family plans to pay the amount of tax, roughly $43,000, on converting the account to a Roth. And remember, once the monies are in a Roth, it's never taxed again. So no income tax, no capital gains tax, and it'll grow tax-free for forever. At age 59 and a half, the value of that Roth IRA would be roughly $3 million in this scenario. So very, very cool how you can take advantage of the compounding in the early years and set yourself up for a tax-free nest egg in the future. Dolan Capital Advisors is a financial planning and investment management firm with the mission of simplifying finances and reducing stress for physicians. We currently manage about $190 million in assets. We have a fiduciary relationship with our clients at all times, and we are a fee-only firm, which means our only source of income comes from our clients. You can reach us at info@DolanCA, again, info@DolanCA, or reach out to us on our website, which is dolanca.com, again, dolanca.com. Thanks for joining today. Really appreciate it.